Hello folks, it's Caleb. I got a few articles that I thought I would read to you and summarize, and perhaps you can gather some information and make some conclusions on them. I'm going to start back a few weeks ago, back in late May, and this one is from May 25th, and the newspaper is called The Australian. The title is Gold Bulls Dig In for Big Rally. Basically says that China, Australia, and the other 16 large mining nations averaged a weekly output of 42.3 tons last year, according to GFMS estimates. Even though the price has fallen, at that time it had fallen, by 5.8% to $1,177 per ounce, from a record of $1,249 per ounce on May 14th. The median prediction in a Bloomberg survey of 23 traders and analysts and investors said it will reach 1,500 by the end of the year. At least that was their estimate. Holders of ETPs, including, get this, old Mr. Gold Bubble himself, George Soros, and John Paulson, accumulated a record of 1,921 tons, 1,921 tons by May 14th, eclipsing all but 4 of the biggest central bank holdings. You can see gold go up another $1,000, said Evan Smith, who helps manage $2 billion. It's just another reminder. $2 billion at U.S. global investors in San Antonio. He also says, quote, all the turmoil and problems we've seen in Europe is just another reminder that there's a lot of value in gold as a safe haven. And he goes on further. The feeling is now, as we move into the expansion phase of economic growth, we want to be diversified in economically sensitive metals, Novak said. We're not negative on the economy now. Okay. And then the article states that gold is favored by investors when the US dollar weakens and inflation increases, of course. The metal can also, however, advance at other times. For instance, gold rose 7.3% this year as the US dollar index jumped 9.6% at the same time. And then Peter Schiff says this, quote, people are afraid of the debasement of all the currencies. What's surprising is that gold is as still low as it is now, he said, predicting $5,000 to $10,000 an ounce in the next 5 to 10 years. Buying rose as European policymakers agreed on $1 trillion emergency loan package to prevent sovereign default. And this is, by the way, before the Hungary crisis, but we'll go into that later. All right, so gold is still at half the peak set in 1980 after adjusting for inflation. Back then, prices rose to $850 per ounce, which would equal $2,266 per ounce today. Investment includes bars and coins, and this has doubled to 1,901 tons last year, exceeding jewelry demand for the first time in 3 decades, according to the GFMS. Central banks and governments also buying gold, adding 425.4 tons last year for a combined total of 30,1116.9 tons. Now, did you catch that? George Soros, who is well known for saying gold's the ultimate bubble, and then the news media took that to say, see, haha, gold's just, this fake market, it's not really any good, it's junk. He's buying ETPs, he's a major buyer of ETPs. And foreign, or not all, just not foreign, all central banks and all governments seem to be increasing their investment in bullion. I thought gold was this worthless metal, junk dug out of the ground and then put back in the ground in vaults, according to Warren Buffett. He says it's a complete joke. Well, if it's a complete joke, then, and if it's totally worthless, then why are central banks buying it up like crazy? Why did India buy 200 tons of gold? Why is China increasing its gold output? China is now the leading producer, or the leading miner of gold. and the government of China is the major buyer of that gold. Why is that? If governments and central banks and all these financial experts say it's complete junk, why are they buying it like crazy? Think about that. Alright, I'll put up some more articles, and I hope this is helpful to you. Bye.